I created this system for a management company that really makes it easy for moving companies with multiple locations. And conceptually, here's what we do. We start at the top with an S corporation, right? An S corporation has massively favorable taxes. We're not going to get into that right now, but for most moving companies, I recommend an S corporation. Then flowing from that, we have each individual location that is an LLC on their own, wholly owned by the management company. Okay. So now we have these operational entities underneath this management company, each with a moving company location, with moving company operations, with trucks and warehouses and all their own operations. Okay. But at the top, we still have this management company. So what's the benefit of the management company? All right. In the management company goes a number of expenses. Number one, your wage. The S corporation is required to have an owner with a reasonable salary. That is you. So you take a reasonable wage from the management company. Number two, you have your call center. As you expand, it gets super beneficial for you to have a central call center that is calling on all of your locations. That's how you can really hit high net operating profits and scalability through efficiency. Next thing you have is software costs. Your CRM is usually one cost for all of your locations. And so that's housed in the management company. And what you might see in a recurring theme here is all of the costs that are associated with all of the companies come out of the management company. Okay. Now, if all of those costs are in the management company, then if we're looking at the LLC P&Ls, which each have their own company, their own accounting software, their own set of books, if we're looking at those individual books, then we're not also considering all of the costs from the holding company. So how does that work? Okay. Every week or bi-weekly, every 2 weeks, once a month, whatever the company can stand, we look at all of the expenses that flow through the holding company. And we take all of those expenses and we allocate them as bills to each subsidiary moving company operation. And a lot of times we'll do that based on sales. So whatever the revenue is of each individual operating entity, they take that percentage of the costs incurred by the management company. And that appropriately allows us to allocate the cost of the management company down to each individual subsidiary. So it makes the expenses of each subsidiary incredibly accurate. Very, very minimal expenses are skewed in any way. And not only that, since all of these subsidiary LLCs are all single member LLCs held by the management company, they're all pass-through entities. And so for this entire convoluted tax structure, everything flows up to one single individual 1120S. It makes it really, really easy on the tax end. It makes the flow very simple and everything aligns accordingly. And one other side benefit I'll add to this, if you ever want to sell a location, now that individual entity acts on its own behalf. And so you can take all the operations of that company and easily market it for sale because it stands on its own. So this is just the structure that we recommend whenever there's multiple entities, and we've yet to have a problem with the true accuracy of the financial statements in each subsidiary.